The second thing is that rates are typically better on a VA loan, and generally about 0.5% better than conventional. So to give you an idea, a client at a 680 credit score for a conventional loan is going to have a much, much worse rate, or the rate's going to cost a lot more compared to a VA client. A VA client's going to have this the same rates or the same rate cost than as someone who's at like the high 700s credit score on a conventional loan. So, and the rate's still going to be a little bit high, half a percent better on average. So, to get a lower, better rate, VA loans just more superior in regards to the monthly payment aspect. There are higher restrictions when it comes to VA loans. I totally get it, but for the most part, the monthly payment's better financially overall. The monthly payment's easier to qualify on. You can generally qualify for more on a VA loan than you can with other home loan programs, and the cash up front is always typically cheaper. And the nice thing is that there's no prepayment penalty. So if you want to add extra payments and pay off your loan sooner or whatever you want to do, you can.
Yeah. So it sounds like if you're eligible for a VA loan, there's no reason you shouldn't use it. Versus
that's what I say. Honestly, that's my stance on everything. Of course, I'm biased, but there are a few very certain situations where the VA loan doesn't make sense. Maybe it's better to go conventional, depending on the situation. If we have a borrower and a co-borrower, and that co-borrower has never served in the military, or it's not a spouse to the veteran, that's a 12.5% down payment on a VA loan. So we may advise a different home loan program where it's conventional or FHA, where the down payment's a lot smaller. Sometimes when they're using the remaining eligibility, there's not enough and they have to come in with the down payment anyway. We may advise conventional in that case because the down payment's still smaller than what's left on the VA loan. So it's a very specific situation in regards to when a VA loan makes less sense. But I'd say for most clients, 80% of the time, probably closer to 95% of the time, I'd say VA loan is way easier to qualify, cheaper, all the best reasons on why to get a home loan through the VA.
And you mentioned qualify. Is the qualifications different? Are they better? Are they worse?
I think overall, to give a kind of a theme of it, I think it's more relaxed compared to other home loan programs. So to give you an example, conventional has a 50% max debt to income ratio cap at 50%, meaning the future mortgage payment and all the debts on the credit report for that borrower cannot exceed 50% of their income. Right. Mm-hmm. So, but with VA, they use a different calculation called residual income, which allows us typically allow for more buying power on the same client. So maybe a client on a conventional loan can only afford a 300. There's a very strong chance that they can actually afford 400 on VA. So that's kind of the buying power options when it comes to the VA loan. Credit scores are a lot more lax. I mean, technically the VA loan doesn't even have a minimum credit score. But the tough thing is that when it comes to qualifications, the VA has written what they have allowed for qualifying for a VA loan. But unfortunately, what a lot of clients will go into is like, oh no, my lender has told me that my debt to income ratio is too high or my credit score is too low. These things that basically opposite of what I just told you, right? Well, the reason why they're hearing those things is something called a lender overlay. And a lot of people don't understand what lender overlays are. A lot of loan officers don't even know what a lender overlay is. I didn't even learn about lender overlay until like 2 or 3 years into my business. So to give you guys an example, what a lender overlay is that the VA said, these are the minimum requirements. We've established this is the minimum requirements. However, because the people with the money, the banks, direct lenders, stuff like that, they're the ones with the money and they have shareholders and investors. They want to make sure the portfolio of loans that they have are very safe loans. So what they do is they put extra requirements on top of what the VA loan allows to make sure that the borrowers that are getting the VA loan are safer from essentially foreclosure. So that's why you have a lot of banks have a minimum credit score for the VA loan, have a max debt to income ratio for the income and other things. There's dozens. There's property types. So that's where some of the misconceptions and the bad information from the VA loans come from. Is that sometimes it's because of the loan officers communicating a lender overlay as a VA home loan requirement, which is unfortunate because it's just what it really means at the end of the day is that that client can't get a VA loan with that specific lender, but that's not how it's communicated. It's being communicated as that they can't get a VA loan at all. So one of the biggest misconceptions, at least here in Washington State, is that there's a big requirement on manufactured homes. Manufactured homes are big in Washington State. They're at least a third of the homes maybe almost half at this point in Washington State. And there are lenders out there that are telling VA clients that they can't get a manufactured home on a VA loan, or the requirements are a lot stricter than it actually is. As an example. So
that's huge. So it will. So what I hear you saying is that if a client is working with a particular lender at X, bank, and they let them know that unfortunately they don't qualify for the manufactured home or for whatever it is that they're whatever home they're looking to buy, it would be beneficial for them to check with another institution or another lender.
I would say someone who specializes, just because, I mean, they could check with another institution. They may say a different thing and a different thing of that. So it's a matter of making sure the person you're referring to, or a specialist opinion is what we like to say in the class. And just saying that, fine, get a specialist opinion and figure out, is it a lender overlay or is it a VA home loan requirement? Right.
Because again, that specialist will
know the difference,
give
basically.
You all the information and can be completely honest with you that there could be an overlay.
Yes. Yeah. So, and the reason why a loan officer may not communicate that lender overlay, or it is a lender overlay, is because they may not know it's a lender overlay at all. Because the education in the loan officer community is just as bad as the information given out to veterans. Like it's almost very small. There are a couple of groups out there that are working on changing that, but for the most part, I mean, it's unfortunate that a lot of the loan officers, what they have to do is what I had to do is dive into the handbook, read the handbook, understand the handbook, know it from back to front, knowing that these are the requirements of the VA, what the VA allows. Anything above that is a lender overlay. Luckily, I was very fortunate that I'm with a company that doesn't have all these overlays at all, which is really nice. But still, I could have known more about the explanations of being able to explain to a lot of people in the beginning of my career that, that's just their requirement. Telling that these are lender overlays, not so much something else. Like they write their VA loans different because they have a special deal with the VA. That's not the case. They just have extra requirements. So, but yeah, I got really, really fortunate because the company I work for doesn't have those overlays. And it helps out clients a lot more to show the opportunity that they can have, instead of being told that they can't do anything at all. Okay. And I think it's important for realtors to know that, just because that impacts your business, right, directly.
Absolutely. Yeah. I just wanted to go back real quick. You said a quick example about if a veteran wanted and a co-borrower they both weren't veterans, and you said that it's about 12.5% down payment. Do you see those typically not working out when one borrower is a veteran, another one isn't?
So I'll be honest, I've never actually done that, where it's a veteran and non-veteran situation. We've always found out another way to kind of restructure the loan, because I tell them, if you want to do it this way, because that's what they think. They think, I'll just add my mom to the loan that's never served. I'm like, well, if you do that, it's 12.5% down payment. And they're like, ooh, we don't want to do that. So generally, we always restructured it in a way that it doesn't include the mom. We do a gift. That's really about it. And sometimes it has to do with a romantic couple situation, or I've had a situation where it was like two married couples that wanted to do that. And I'm like, you guys sure you want to do this? And the conversation I have with them is a little awkward, because I asked them, like, look, if it's a romantic couple situation, I'm like, look, Even if it's not, maybe it's two friends, and they want to buy a house together, whatever the situation. If they're not married, I always ask them this question. I was like, look, and I always put it in this situation. It's like, I know this is what you guys want to do. I think it's a great idea. However, I need to be prepared. I need to prepare you for what's actually happening legally. What's actually happening legally is that you're getting married to this person in real estate wise. You're going to be on the title together. You're going to be tied. You're going to be tied the knot in the form of real estate. So do you want to be married to this person? Essentially, that's the question at the end of the day. Some of them are like, yeah, we're actually already engaged. And I'm like, all right, cool. Just want to make sure. But I had a situation a couple months ago where they're like, oh, we're looking to buy an investment property together, a fourplex. We just started dating maybe 6 months ago. I'm like, you guys looking to get married soon? Like, because that's what you're doing with this house. Then they thought about it. They're like, oh, yeah, we don't want to do that. And I'm like, that's what I thought. So
Yeah. That's a great question. And some people are just moving too fast for their brains and they're not thinking through everything.
Yeah, because I mean, the divorce is a lot easier in the form of real estate, but there's still, you still go through the same things as far as trying to divvy up the finances. Sometimes they want the finances now, and then you have to figure out how to sell the house or refinance the house, and it just becomes a huge mess because not everyone is always on the same page when it comes to investments. So.
Yeah. I agree. Do you have one?
No.
So you were talking about guidelines and relaxed, in the relaxed manner, and on a conventional loan, if there's a foreclosure, bankruptcy, short sale, there's typically a timeline somewhere in between, I think 2 to
4
years.
maybe 5. Depending on the
Right.
situation.
And is it that same on the VA side, or is it
VA is even more lax than that? I'd say like Chapter 7 is a 2-year timeline. Foreclosure is about a 2-year timeline. And then short sales, as long as the mortgage payment was up to date from the short sale, then they could pretty much buy a house at any time. And then Chapter 13 bankruptcy is the interesting one. Chapter 13 bankruptcy, the main stipulation when it comes to that is that as long as the last 12 months of Chapter 13 payments have been on time and the buyer gets a letter from the judge that they can buy a house, they can do it while they're paying on the Chapter 13 bankruptcy. Okay. So they don't have to wait till the Chapter 13 bankruptcy is done, wait a year, and then buy a house. They don't have to do that. They can actually wait a year. 12 months payments.
Good. So it's more or less of keeping those payments going.
Yeah, really. I mean, overall, a lot of stuff when it comes to the VA loan, if there's been a derogatory life event or a bunch of derogatory, just a negative remark on a credit report, late payments, collections, things like that. If there's been a history of that or something big happened, VA basically says as long as you can reestablish 12 months of clean history, it's like an addiction in a way. Like if you can establish 12 months of history, then you show that you've done. Reestablish your credit history, good to go. So,
yeah, good. That makes sense. So we had briefly touched on something that we didn't go deep into it at all, but I want to get your take on this so we can clear this up.
Okay.
VA loans has a stigma to it sometimes, or for many years it has. I think it's possibly gotten a little bit better. You can tell me what you've seen from your side. And so from a seller's point of view, some sellers are receiving information from their real estate agents when they have a choice of loans. Let's say they received multiple offers. One is a VA loan, one's a conventional loan, one's an FHA loan. Sometimes I think the advice is given is that, you don't want to choose a VA loan. They're too strict. Can you talk a little bit about that for me, please?
Absolutely. So this was one of the interesting things I had to learn about coming into this business as someone who just wanted to do VA loans and help military and veteran families out. I didn't know there was a narrative around VA loans being as bad as they were. And when I started, it was bad. Like there were so many, misconceptions and so many issues that came up whenever a client tried to submit an offer. Even buyer's agents were telling me, hey, can you pre-approve them with a different loan program? Like, why would we do that? That's crazy. Why are you asking me to pre-approve a client a different way when it's financially doesn't even make sense? They don't even have that much money, let alone to be able to pay for closing costs. So yeah, there is a bad narrative. And I think specifically in Kitsap County has gotten a lot better. Maybe it's just me, I'm not sure, but I feel like the narrative around VA loans has gotten to the point where they're starting to realize it has nothing to do with the VA loan itself. It has to do with the lender that's behind the VA loan itself. So a lot of the narratives, what I found out was as I further tried to understand why there was such a bad narrative, had to do with just honestly the loan officers that were doing those VA loans. It had to do with just, as I mentioned before, had to do with the competency of that loan officer team, understanding how VA loans are done, because VA loans are done differently than other home loan programs. So if there's not an understanding of those differences, then yes, of course, there's going to, if you process a VA loan like you do a conventional loan, of course, you're going to come into some issues and not prepared to see the nuances of how each loan program is going to be different. So yes, there was a really bad narrative, and what I had to do for many years, for probably the first 3 or 4 years, was to call every single listing agent and tell them and talk them through about all these misconceptions that they may have or whatever they heard, because I don't think sellers, when they first decide to sell their house, I don't think they're like thinking about which loan program to accept. I don't think that's the case. I think the only person with that type of information is the listing agent. So I think, and listing agents, not to say that they were out to not receive VA loan offers. I think they were just trying to protect their business and their clients from a potentially really bad situation. I think it's all coming from a good place. What's unfortunate is that their experience was stemmed from loan officers who were doing the VA loan not the way it was supposed to be. And then, whatever comes up as a reason as that the loan officer didn't close on time or didn't close it well, stuck in that listing agent's mind, if they were a buyer or seller at that listing agent at that time, and that burned in their brain like any kind of traumatic transaction can be, and they're just trying to do their best to protect the client. But on my end, I'm trying to advocate and tell agents that the VA loan, it had nothing to do with the VA loan. It had everything to do with how the loan officer was, or that team was handling the VA loan. So most of the time it was that. It had nothing to do with the VA loan itself.
Right. I think, well, I know I can agree with you on that for sure. I was a lender for 7 years, and now I've been in real estate for, I think, over 15 years.
Okay.
So I think where some of that confusion comes in is it's certainly much less about the VA loan, but there are some stipulations that come in on the appraisal. Do you have any information on that? How
I'd say the
VA
appraisal is just the same as
differs?
any other home loan program. I'll be honest.
Okay.
I think this is my theory in regards to why appraisals were such a pain before and not as much as they are now. So I believe before 2008, 2010-ish, before the whole mortgage meltdown, essentially, is that conventional and FHA loans, even USDA loans, had a different standard when it came to appraisal requirements before that time. And VA always essentially kind of kept the same standards as far as the minimum property requirements, meaning these are requirements that the property has to maintain to be an eligible property for that home loan program. So I think the VA loan always had been more at a higher standard, is the best way to describe it. And all the other home programs didn't have that high of a standard. I think after 2010, with all the mortgage meltdowns, with all the homes foreclosed and not in great condition, all that stuff, all the other home loan programs realized they had to raise their standards and realized the VA was had something going on there when it came to that. Now, on the other people's defense in regards to the VA appraisal side, is that there at some point in the past, the VA appraisal standards were too high. And I think the VA did understand that. So one of the things that always came up that that always is a question for me is that, are they going to call it the color of the paint and all these really weird cosmetic issues?
Yeah.
And the VA has revamped their entire VA appraisal process about 15, 20 years ago, where they can't even call out cosmetic issues. They're only allowed to call out visual and obvious safety concerns, which has equalized all appraisal requirements across those other home loan programs. Now they're all effectively the same. I'd say the only difference is that we have some appraisers that are still kind of stuck behind the times a little bit. I think it's improved a lot since, and now the appraisals for, like, I'll be honest, I've done some transactions and listings where the homes, I'll be honest, shouldn't have not passed appraisal, but they did. So that's only for me a testament to show that, times have changed. And again, there's sometimes, depending on what repairs may be called out, also every lender has a different way of approaching those repairs. Some lenders may say, no, we can't do it. Some lenders may say, we need the appraiser to go back out to verify those repairs. We just need a picture of it being done for the most part. But there's only a very few situations where appraiser has to go back out. So I think overall, over the last, I'd say 20 years, when it comes to VA appraisal requirements, I'd say they're all about the same. I think VA appraisers are a little more experienced appraisers, because in order to be in a VA appraiser, you have to be in the business for at least 5 years as an appraiser. Now, I say that generally. I get it. There's nuances between professionals, obviously, but generally they are more experienced. And most appraisers do want to be on the VA list. I mean, that's like, for them, that's the height, essentially.
I can definitely agree with you on within the last year, and even going back 2 years, I think the conventional appraisers have raised their standards up to what the VA standards have been, because I've seen there were a couple of homes that I sold that I thought maybe the something would be called out on the VA appraisal that I have been used to for many years.
Sure,
and
of course.
those things were not called out.
Right.
However, shortly after that, I had a conventional appraisal, and a handful of things were called out that I thought would have never been called out.
Right.
So, so I guess it's not only the loan type, but it's the appraisers. Appraisers are people, and
yeah,
they
absolutely.
see what they see, they call out what they think they should call out, and their experience levels are different.
I totally agree. I think over the last 10, 15 years, they've basically equalized, and they're all essentially the same requirements. So of course, it's in the eye of the beholder, of course. So hopefully the mood of the appraisers in a good mood that day when they see your house and write the report.
Yeah, good. Do you have any questions at all?
Those are all mine. He answered a few as we're going.
Excellent.
Yeah.
I think we've gone down our list of questions, and we've been enlightened. We definitely answered our questions that we wrote down, and some that we didn't even have. So this has been fantastic.
Cool. Yeah. I mean, this has been good for me too. So got to answer some questions I haven't answered in a long time. So with some more insight, of course. Yeah. More experience.
So if someone wants to, work with you or even ask questions as far as a consumer goes, or someone that's looking to buy a house, or they think they may be eligible for VA, how can they get in contact with you?
I'd say start with my website. We have a whole website where you can kind of learn more about our team, but there's a spot where it says schedule a chat. And that's the best way to get on my calendar to schedule a chat, a 15, 20-minute phone call consultation, basically. And they can do that right on the website. It gets right on my calendar. I call them and we figure stuff out. So, but I can easily send that to you guys. It's called nukenotesteam.com. But yeah, it's a website, but my loan partner design looks really great. Super simple. We have a bit of a kind of a blog section, but we have the intro section. There's a tab that says schedule a call. That's where they can go in. There's a whole Calendly that's synced to my calendar. So it will show the availabilities based on their time zone, wherever they're calling from. And they can get directly on my calendar when they schedule an appointment on there, and it's free. So
Good.
yeah, it's an easy way to do that, and they can, yeah, that's how to get on my calendar, because my calendar runs my life.
Oh, absolutely. If it's not on the calendar, it doesn't
Yeah.
Yeah, it
exist.
doesn't exist. Yeah, that's exactly right. So if it's not on my calendar, I'm checking out. Sorry.
Yeah. On to something else.
Yeah.
Good.
So
I
yeah,
really
that's where
appreciate
you
it.
reach out to me.
Thank you so much. Do you have any final thoughts or words before we go?
I mean, yeah, I mean, I think the main thing is, the education that's out there is can be very confusing if you don't go to a class, things like that. We have a whole education department. I teach classes from time to time, so I don't do them as much anymore, but we have a whole education department that does teach classes regularly. We're working on trying to get that updated on our website as well. We have a whole education tab for that. But I also have recorded a ton of YouTube videos on my YouTube channel about VA loans and little videos, 5 to 10 minutes at a time. So if there's information that you're specifically seeking, you can also check out my YouTube channel. That's also called Nuke Notes, which is, I believe, there's some videos that are linked in my website as well. So yeah, if you look up Nuke Notes, you'll find my YouTube channel. Look under the live videos for VA Fridays, and that's where you'll see a huge database of videos that I've done over the last year and a half for almost every single Friday. So
Wow. You're a busy
Yeah.
man. I appreciate
so yeah, just trying
I
to get the
appreciate
information
all
out there.
Yeah, I appreciate all the education, that's for sure. Now, will you go back to teaching classes? Because I know that you were out there probably every week or a few times a week teaching
That's what it felt
classes.
like. Yeah, honestly, that's what it was. I'm still teaching the realtor classes to the realtors and real estate agents, mostly to the associations. And then I just got certified by the NAR to do the MR Military Relocation Professional Designation course. So I'm certified to teach that now. I think I'm the only one in Washington State to be able to teach that now. But as far as the upfront homebuyer education, maybe I just think what had happened last year is when we were doing them, we weren't getting much of a turnout, and unfortunately, there wasn't much of a conversion. So
Yeah.
I switched them to doing on Zoom, and then my schedule got crazy. So now the education team that does those classes regularly I think they do at least twice a month on Zoom. The education team is, I used to be part of it. I just obviously stepped away because my life got a little too busy. But they're still doing classes pretty regularly. So if people are looking to do classes or attend a class, they're free. They're on Zoom. You don't have to show up, wear your jammies, eat dinner while you're hanging out with the family, while you're listening to us to talk about VA home loan stuff.
Good. Excellent.
Mhm.
Thank you so much, Lee. I really appreciate it.
Of course, it's my pleasure.